Well, the reality is nobody wants to talk about losers, but there are some great teaching points, and the truth is nobody picks 100% winners. You are going to pick losers, and I'm not just talking about my dating life either. It happens to Warren Buffett, Cathie Wood. Every investor out there has had or has losers in their portfolio. And I would love to talk about my Clover swing trade that almost tripled my money, but I want to be as real as possible with you guys, and there is a lot of valuable information to be gained by looking at my losing picks, even if it hurts and it kind of sucks. So I will tell you what stocks I screwed up on, what I plan to do with those stocks, and drop little nuggets here and there throughout on what to do when you pick a loser, because it will happen to you at some point. And you guys know I give you the truth without the hype, and that's why you are subscribed. And for those of you that aren't subscribed, it's free and easy to do, so make sure you do it now so you don't forget. And at least give the video a thumbs up for transparency and because I need some love after buying these stocks because it really hurts and sucks. So as promised in my last video that I'll put up right here for you, there are no ads and no sponsors in this video, but figured I better get my Market Insiders private group plug-in now before I tell you about my worst stocks. I mean, that just makes the most sense, right? So if you want free access to 3 courses, and there's a 4th on the way, which I obviously need to retake, and you want to see all the moves I make in real time, which after watching this video may be a turnoff, and a ton more that I will discuss at the end of this video for the price that is less than a cheap date at McDonald's, then check out the first link in the description. So as I said earlier, nobody's perfect, and yes, I have picked some losers over the years, and I'm not talking about dates either, guys, come on. So the first loser that is actually still in my portfolio is Sarepta, or ticker symbol SRPT, and I know up front I'm probably pronouncing it incorrectly, I'm sorry. I bought this stock after the huge fall in price from the high 160s all the way down to 80 bucks or so. And this is a classic move that I like to use. Wall Street always overreacts to anything both good and bad, so I love to use the overreactions to the downside to get shares on the cheap. Most of the time, this works out in my favor, but so far with this stock, it has not worked in my favor at all. And another mistake I made in this stock was investing in something outside of my circle of confidence, so I truly cannot point to how the business will progress and dig the stock out of this hole. I mean, if Tesla trades flat for 2 years, I'm not selling as I understand why it's trading flat, but more importantly, I can clearly lay out the revenue projections and profitability coming in the future, so I'm comfortable holding Tesla even if it doesn't make me money for years, because I can see where it will be in 3 years, 5 years, 10 years from now. I cannot do that with Sarepta, so it makes it very hard to just hold forever like other stocks that I own. I mean, it may be a 2x stock in 5 years, but I personally cannot see it because I just do not have the competency to make that assumption with this stock. So I may end up holding this stock long term, but for now I'm leaning towards selling this stock on any gain or harvesting the loss for tax purposes at the end of the year if the stock is still down and it makes sense to do it from a tax perspective. Either way, I made a mistake and it hurts to say the least. So the second loser I have in my portfolio is Alibaba, or ticker symbol BABA. Now, unlike Sarepta, my plan with Alibaba is completely different, and I will explain why in just a second. So I added Alibaba to my portfolio on all the Jack Ma disappeared noise last year. I'm not going to get into specifics on that again, but I knew it was more hype and noise than truth, so it once again was the perfect time to pick up a great company on a huge discount down from over $300 all the way down to $225. The problem? It still hasn't recovered yet, and I can still buy cheaper than I did last year. But unlike Sarepta, I completely understand Baba's financials, market opportunity, and the stock itself and where it's going in the future. Once US tensions with China tone down a bit, which they always do eventually, Baba will once again start to climb back up. Do I think it can reach its previous highs? Well, yeah, absolutely I do. And I feel comfortable that Alibaba is not going anywhere, so I'm holding even if it takes a year or more to recover, and start to move back up on me. And the final loser I have in my portfolio is Airbnb, or ticker symbol ABNB. This was sitting at around $220 just a few months ago, and I thought I got a steal at $170 per share. And clearly I was wrong, as it continued to fall down into the 120s and is currently sitting at around $150 per share or so. I think the opportunity is huge for Airbnb, and I know personally pre-pandemic I traveled a ton and I almost exclusively used Airbnb no matter where in the world I traveled. And although they are not profitable yet, I do believe long term the trend will move to Airbnb being more commonly accepted not only by people, but by businesses as well. Sure, my parents may never stay in one, but I absolutely will, and many of the younger 20-somethings I know would also prefer to stay in an Airbnb than a hotel. But my plan for the stock is slightly different from my plan with Baba or Sarepta. So I will hold the shares that I have now, and will be looking to add heavily based on my revised price targets for the stock. So when it hits those price targets, I'm going to add a lot more shares of Airbnb. The bottom line with having a losing stock is this: you will make mistakes, everybody does. But it's important to not get emotional and stick to your plan with that stock and assess the stock itself. Sometimes you do make a mistake on the stock itself like I did with Sarepta. Other times I did not make a mistake on the stock itself, but I did make a mistake on the entry point, which just means I need to average down if I want to increase my position. But any rash, emotional decision to sell and take a loss will leave a bad taste in your mouth, and you may miss out on great stocks that is a huge long-term winner, as you won't look to take advantage of those lower prices. Imagine all the people that lost money last March as the illness kind of started and sold out at or near the bottom, and then missed out on some of the biggest runs we've ever seen. This is why due diligence is so important, and having a plan for both if a stock goes up or goes down is critical to your success. And if you don't have a defined plan for all your stocks, or you don't know how to create a plan or value a stock, we can help you with their planning, as there is a course in the Market Insiders private group dedicated to that, along with creating an infinite money loop and other courses available as well, along with live weekly Q&As where you can ask me basically anything, a great Discord group, tons of exclusive videos, downloads, and more, all for the price of a meal for two at McDonald's. Just consider it a cheap date that went really well. So check that out, it's the first link in the description. So thanks for watching, and we'll see you in the next one.